Thanks very much for that introduction. It's really good to see so many of you this morning, especially after that cocktail event last night. I also think we're extremely privileged today to have the panel that we do, and I think you're going to really enjoy the insights that we get from the panel, and hopefully, you'll get the opportunity to ask a few questions towards the end. So just to confirm and just to play back what we'll discuss today, our panel discussion is around property development trends in the data center sector. And having spoken to a lot of you over the last day, I know this has been quite anticipated, just based on the hype and the activity in the space. So what I wanted to do is just provide a little bit of context to the discussion, a couple of minutes. And then what I'm going to do is go into the discussion, and what I'm going to ask each of my panelists is just to introduce themselves, as I ask them the questions and take them through that. So just a little bit of context, and I know a lot of you may know this information, but I think it provides sort of a good base for the discussion. The data center services sector was valued at just under $50 billion in 2020. And it is speculated by 2026 that figure will increase to over 100 billion. According to the Data Center Services Market Report, the main drivers are the new normal in terms of remote working, AI, smart cities, automation, data-intensive activities, e-commerce, digitization of existing processes, growing industrial sector using digital technologies, the rise in SMEs adopting digital technologies, the growing use of over-the-top services, and the development of generating data-hungry and data-intensive technologies such as Internet of Things and machine learning. We are seeing a large growth in the technologies that require data centers. For example, the growing demand of cloud services, whose providers opt for external data centers. So as a lot of you would appreciate, this is a trend that, that is being more and more adopted, purely based on the intensive capital expenditure into data centers, and also the subsequent maintenance within those data centers. A little bit on Africa, and again, a lot of the speakers have been sort of touching on that over the last day or so, but we know Africa is an exciting space to be in. There's a lot of growth. So just in terms of, this region specifically is experiencing rapid economic growth, endorsed from the increasing use of internet, which has spurred the development of data-intensive services, such as cloud computing and digital technology. Africa is, however, behind other regions in terms of data center infrastructure capability, which cites a good opportunity in terms of investment and growth. The other sort of points that I thought were quite useful was just to mention was East Africa boasts 3 of the world's top 10 fastest growing economies, but faces major challenges in terms of attracting foreign direct investment. And then again, something that you've heard, just a little bit of a theme over the last day, is that by 2050, 1 in 4 people will be African. So I think that's obviously just huge economic growth and the requirement for infrastructure development. So what we wanted to structure our conversation around today, and we've obviously spent a little bit of time discussing it, is we wanted to just discuss the data centers as an asset class. And I know a lot of developers in the room and landowners, it's not really an asset class that you may necessarily be familiar with. So we wanted to just touch on what are the differences, what does the investment look like, what does the development risk look like, and we wanted to just touch on those aspects. So we're going to come from a little bit more from layman's terms in terms of what data centers are. And Heath, I'm going to start off with you, just to give us a little bit of insight into what is a data center in layman's term? What is a data center? What does it do? Just give us a little bit of a flavor for, that. What is a data center? What is it, essentially?
Hi, everyone. So A data center is essentially a room, or these days more and more a building that houses the computer equipment to run a business. And generally that's servers and switches and that type of equipment. And you'll see it in a rack, as we call it. And a rack is a sort of a cupboard that's about 1.2 square meters, roughly about 2 meters tall, and you can get anywhere between sort of 30 to 40 servers or racks in that. So you've got a very, very small space that you're having a lot of serving computing power. And what you do then is you put that in a dedicated space, and this dedicated space then normally has dedicated cooling, dedicated power, because these computer services are normally very critical to running your business, so you don't want them to go down. So you've got these racks in a room or a building, and then you might line them up in rows so that you get them organized. And then, as you can imagine, if you're putting all these computers and servers and switches in one space, the actual power demand and the cooling demand is extremely high. So you end up with these buildings which have large demands on power and cooling, and they also require this power and cooling 24/7. So you have a large demand, and then you need to have redundancy to ensure that if, say, one of the cooling unit fails, another one comes on. So generally speaking, we then end up with buildings which have rather small usable spaces, but rather large plant spaces. So that's what a data center is. And it started out as rooms, and it's slowly moved more and more towards building type infrastructure.
And Heath, maybe just to give the audience a little bit of an idea of that split between sort of the engineering services, the big M&E equipment versus the civil structural component of it, just roughly in percentages.
You're all in the property, so you're not probably used to, let's say, looking at, let's say, a commercial building. A commercial building, forgive me, I'll use South African numbers, but I know the metrics are kind of similar across Africa. You might look at where the civil and structural is sort of anywhere between 60 to 80% of the construction cost, and the M&E would be the 40 to 30%. So the building cost and the building design is driven by the civil and structural. When you've got a data center, it's actually turned on its head. 80% of the cost is driven by the M&E, 50% of that being electrical, 30% of that being electrical, and then the last 20% is on civil and structural. So you have these buildings that are really driven primarily by the electrical infrastructure, then the mechanical infrastructure in the building.
Heath, I'm going to stay with you, but just a few more highlights just in terms of the overall data center space. So our team pulled out a few stats in terms of megawatt capacity, which were stats from 2022, 2023. So just to give you an idea of capacity in terms of megawatt space, Europe is sitting at over 8,000 megawatts, the US just over 5,000, China surprisingly just over 1,000 megawatts, India just less than 1,000 megawatts. And then South Africa, which we know is slightly ahead of some of the other African regions, is sitting at, our team said just below 500, but Heath corrected me to say it's closer to the 200 megawatt mark. And then in terms of numbers, for those of you that are interested, South Africa, 31 data centers, Nigeria, 11, Mauritius, 10, Kenya, 9, and then the other African regions ranging from 0 to about 7. So it just gives you an idea of where Africa and South Africa and some of the other regions sit. So Heath, sticking with you, obviously there's been a lot of hype in this space. Everyone's talking data centers. That's a little bit of an unknown sector. But what is the reality of the hype? Is it reality? Is it a hype? And are we going to see this growth, in the foreseeable future?
Look, my short answer is yes. I think the hype is real. It's just a matter of time. It's like any of these trends we see. A lot of this stuff we look to Europe, or we look to America, or we look to other emerging markets to see what's happening. For instance, if you look in Southeast Asia at the moment, I just saw during the week in Malaysia, and Malaysia probably has a GDP per person very similar to a lot of African countries. Vantage, who are a data center operator actually in Africa already, they just announced a 250 megawatt campus in Malaysia. Now, that's one building just purely for data centers. We're not there in Africa yet. In South Africa, in the last couple of years, we've started building sort of 180 megawatt campuses, whereas 4 or 5 years ago, we were building 20 or maybe 40 megawatt campuses. Kenya, Clement here is building a 20 megawatt site, which Kenya in the last couple of years has definitely taken a bit of a step up from the 1 to 2 megawatt things and getting into the bigger. So give it a few years and Kenya will be building the 100 megawatt ones like we are, is my belief. And then you look at Nigeria, it's maybe a couple of years ahead of the Kenyan market. But so I do believe it's coming.
We'll come back a little bit later in the conversation just to who's playing in the space, who the operators are, etc. I wanted to move maybe to the investment side of it. And Ravi, I'm going to bring you in, and maybe you can just introduce yourself, before you answer the question. But I was just wondering, how does the investment and growth in other regions you are active in compare to East Africa, just in terms of funding and the demand for data centers? What are you seeing in that space, and maybe just give us some of your insights.
Morning, everyone. Thank you, Matthew. Thank you for having me on this panel. It's a pleasure to be here amongst all of you. So Actis is active sort of in the data center space in Africa and Asia and across Latin America. And aside from Africa, what we've actually seen is that there's an initial sort of burst in demand for co-location, and that's predominantly in all the regions, including Europe and the US. But Africa is actually somewhat different. So when we began investing in Africa in 2020 with our first investment in Rack Center in Lagos, what we saw was that we were investing behind the co-location story, and actually what we saw was a massive increase in demand for hyperscale. And so co-location is typically driven by enterprises outsourcing, and in Africa the story is somewhat different, where sort of we're seeing them bypass this and go directly towards the cloud. And what that actually means is that we need much bigger facilities and we need them much quicker. So like Heath mentioned, I think on the supply side, if you look at sort of tier 1 cities in Africa, sort of 3, 4, 5 years ago, the average new build data center was 500 kilowatts. Fast forward to today, no new build data center is less than 5 megawatts. Much like the expansion that we're doing to Rack Center in Nigeria at the moment. It's a new 12 megawatt facility coming to market next year. Now, if you look at the demand side, and I'm going to use Rack Center as an example, our phase 1, 750 kilowatts, took us 6 years to fill to 80 customers. In 2021, we expanded another 750 kilowatts, phase 1B. That took us 6 months to fill to 5 customers. And sort of what we saw was that, on average, each customer was taking a lot more power, and they were taking it a lot quicker. Our pipeline for space is actually so deep now that we can't build quick enough to meet that, and it just goes to what Heath was saying about sort of the growth in South Africa, and the kind of builds that we're seeing coming on campuses we're seeing in South Africa. I think if I sort of try and contrast West and East Africa, I'd say that sort of East Africa is a lot more competitive. There's a lot more investment that's happened in East Africa, and that's predominantly in Nairobi. But it's quite surprising, given that sort of Lagos is much further along the curve, and it's sort of a much deeper market with more hyperscale interest than in Nairobi.
And Ravi, maybe just sticking with that theme, just in terms of the amount of investment and how funds are being raised, can you just give us a little bit of insight into that? I mean, obviously it's a very active space. I can imagine investors are hungry to get involved. What does that quantum look like? And just give us a bit of insight into that.
Sure. So I think the data center space globally has gone through a lot of sort of secular growth, strong growth, and Africa is really it's no less. it's the last sort of untapped market. Now, if you look at what happened in Africa between sort of 2021 and first half of 2022, there were a ton of assets in Africa that sort of came up, and there was a frenzy of, high competition, high bidding for these assets. Sort of at the time, we had a buy and build platform strategy for Africa, and in every single instance, I think we were outbid by a lot of the competition, which was surprising to us, given that a lot of the new players coming into the market at the time were, first-time investors into the data center space in Africa. Now, in terms of sort of, the quantum of funds, or rather the source of funds outside of your strategics, there's not been many sort of, data center-specific vehicles raised. So a lot of the funding is coming from generalist private equity funds, sort of, looking at entering this market. But I think, going forward, as you've seen in sort of large cap private equity in Western markets, you will see sort of more data center or digital infrastructure specific vehicles coming up to fund this growth in Africa.
Thank you, Ravi. That's really useful there. Donald, I'm gonna shift across to you, and Michaela, I'm not gonna forget about you, and Clement, I'll be with you shortly. Obviously, Grit are active in the market. You now run the sort of East African region for Grit. Just in terms of how attractive the data center sort of market is for you in investment, and what you're seeing in that space. What are the pitfalls? Are they difficult to develop and run? I know that you have been active in Nigeria as well. I don't know how active you've been in East Africa, but maybe just give us a bit of some of your thoughts in that regard.
Okay, yeah, thanks very much. My primary role now is actually looking after an industrial substructure which is sitting under Grit, and the data centers sit in that space. So it's front and center of what we're looking at. And to Ravi's point, it's going to start being somewhat specialized vehicles that start looking at making investments. Yeah, but it's tremendously exciting space. We like it because we're not running the data centers, and as they get bigger, they're big ticket investments. So there's a lovely space that we can operate in doing that 20% that Heath was talking about. We believe we can provide a great service to the investors coming in, running the actual data centers, which is an ability to get things done and to operate in these countries. I sit in Nairobi and run East Africa, and this is a big focus place for us. We've got a number of exciting projects that we're looking at here. The other thing is there's an element of, I don't know what the right term is, data nationalism. Some countries are insisting that data has to be retained in the country. So I think Nigeria is one where they're quite aggressive about it. So banking data, for example, they want to know that the data's in the country. I'm not an engineer, whether that can actually work when you can't just sort of move it away. Yeah. Sovereignty.
Keith, maybe just lift your...
Okay.
Yeah. So, I mean, the good news then is that, most countries are going to have to get more and more data centers, and I think they're just getting bigger and bigger. So, yeah, I think it's a very exciting story.
You touch on a good point, which I should have mentioned in my intro, was just around the need to have that data in country, and what impact that has, and we'll touch on that a little bit later. Clement, I'm going to bring you in, and I think you're an interesting part of the panel because I think you've lived and breathed developing a data center. You've been in Kenya for over 10 years, even though you are even though you are French. But I just wanted to get I wanted you to share with the audience just your experience and a little bit about your hypercloud sort of campus that you guys have developed. I think it's super interesting, and because you've sort of acted as the developer, investor, now operator, give us a little bit of, maybe just a bit of sort of background on the actual development and your experience in having been through that entire process in Nairobi.
Thank you, Matthew. Hi everyone. So my name is Clément Martineau, and I arrived 11 years ago in Kenya for Orange. Orange used to own Telkom Kenya, so I started a bit on building smaller server rooms and the landing station in Mombasa. And we saw this rise of data center colocation, but we took we had the idea of going straight for what was happening in Europe and in US, etc., with much bigger facility. So to Ravi's point, we had an original idea to do 100, 200 racks, and our first building is finally 750, 800 racks on Mombasa Road. And we got a close to 5 acres piece of land to allow us for growth. So for the clients, mostly, we thought that in South Africa actually with Terraco, because some of our directors and shareholders were originally Terraco's directors and shareholders as well. So what happened there is when the first Terraco data center was being built, they wanted to expand, they get slightly more land on the site to expand, and of course all the neighbors didn't want to sell or increase the price of the land by 2 or 3. So we flipped this and we bought 5 acres and built the first hyperscale campus in this part of the world. So the first building is 4.5 megawatt of IT load, but the total campus will be close to 22, 23 megawatt. And that makes us today the biggest in the region. Of course, we started with a smaller phase that is actually opening at the end of June. That was for the first point, sorry.
Yeah, and just your experiences, I suppose, just give the audience a little bit of, I mean, it's a very different building. We've talked a lot about that. It's very M&E, mechanical, electrical intensive. No one had really built data centers before in the region, so it was quite a sort of a bit of a learning curve for you guys, I can imagine.
Yeah, so I'm also happy to be here today, just first of all to introduce myself, but also 5-6 years ago when we were thinking of this project, we were trying to raise money and we were knocking at the doors of the real estate companies that were doing, no, we don't do IT projects. And then I was going to the funds and they would say, we don't do real estate projects. So, and today there is, I think it's the first time for a summit like that, a data center component to the conference. So I was delighted to be part of it, and once again, thank you for having me. So I see things changing, and still it's not such an easy project in the sense that we have to make companies working together, especially all the mechanical, electrical, and civil works. So we're using a lot of advanced technologies in terms of BIM, so Revit, all that. So finding the right team. I mean, we had the very good contractors in Kenya, but making them work together was maybe a bit the main challenge. And getting to the standards we wanted for the clients we have here. So that was maybe the most tricky part of it.
Okay, thank you, Clem.
Can I just add something to that? Like, IX Africa is an interesting case. There's quite a few across Africa of these entrepreneurs who've sort of gone out, developed these themselves, pulled the money together. And the reason I think it's important to you guys is once they get to a certain size, they can't do all the development themselves. So I wouldn't be surprised if Clem's next 20 megawatt site, he's going to developers or he's going to other people to help him to build that, because he's basically pulled this one and built it himself. Like when he's running the company in a few years, he's not going to be able to do that. So it's just nice to see that iteration, because we see it with Terraco, we see it, Main One, Rack Center was a bit like that, Main One's the other guys. Main One are doing that now with Equinix, so yeah.
Heath, let's stay with you then, I suppose, because I had a couple of questions, again, a little bit of a lesson for all of us, I suppose. But just give the audience a little bit of a feel for what are the different types of data centers and who are the different operators that are playing in the space. Obviously, you don't share anything you can't share, but you know, who's playing in the space, what are the different type of data centers? Just high level.
Okay, yeah, so I think we can roughly break it into 3 types. There's one they call an enterprise data center, which is If you're a company, you have like your own data center that you run your own computers in, and sometimes they call it on-prem or on-premises because it's generally on-site. Then we'll have co-location, which is, it sort of started in the 90s when the banks were getting more and more digital and they were having massive data centers on their balance sheet and wanted to move them off. They got third parties to come and build data centers, and then they moved their racks from their enterprise data center to a co-location data center. And then the co-location people then leased them the space in that data center. So in that example, you've got your own racks, you're putting them in someone else's building. And then the third one we've now got is, like Ravi is talking to, is the cloud or the hyperscalers. This is where the Amazons, the Googles, the Microsofts, they come to you and say, look, don't even worry about having the racks or the computers. You come and use our racks and computers. You just get your IT guys to connect into our data centers, and then you just use that service. Now, there's obviously nuances around that, but I think for this audience that there's those three main ones.
Okay, and just in terms of operators and who's
Yeah,
coming into the space,
sure.
I mean, and what's also fascinating for me is who's managing to hook the big Googles of the world and Microsofts and Oracles, and so it's quite a competitive space. Huh?
It is, because I'm gonna make my example not look completely right now, because Ravi, as an example, like the co-location guys love the hyperscalers. Technically speaking, the only hyperscaler that's done their own build in Africa is Amazon, and they're built in Cape Town. All the other hyperscalers at the moment in Africa, they come and take space in co-location. And the reason co-location likes them is because Microsoft, Amazon, they'll come and take 200, 300, 400 racks at a time. Whereas your average enterprise client, like a bank or an insurance company, they're taking 2, 3, 5, maybe 20 racks. So the clients we see here, there's quite a few Pan-African ones, and African-born ones, Ajax Africa, ADC, Rack Center, main one who are now owned by Equinix. Equinix and Digital Realty are the two big players globally. Previous just sort of private property developers, now data center operators. They both have some presence across Africa, but they're not completely here yet. They're just warming up to come in.
Thank you, Heath. That's helpful there. Clement, just to finish off with you, another quick question. Ajax Africa's growth strategy, I mean, is your focus on Kenya and Nairobi, or are you looking at Tanzania, Uganda, anywhere else that you just in terms of your growth?
So, due to our hypercloud, hyperscale strategy, we'll focus on Nairobi for now. Getting one or two, if not maybe a third facility in Kenya, and that should take me a good few years. So for now, I'll stick to Kenya for this kind of data center. We have Helios now as an investor, so we'll see also in the next 2-3 years how the market evolves. But we'll try to stick to facilities that can host those cloud machines, and not really going to compete with the Raxio or those other ICOLO that have today facilities of 100, 200, 300 racks, more towards smaller colocation and SMEs. So for now, Kenya,
Okay.
big time.
Donald, the same sort of question for you. Obviously, Grit are very active in a whole lot of different regions. I mean, do you see East Africa being more active than West Africa, as an example, or North Africa, and where are your focuses?
Yeah, all three of those. We see East Africa being a huge driver, and Kenya in particular. But we are looking in West Africa and North Africa. So I think it's the bigger economies where the drive is for the bigger data centers. So yep.
Okay, that's great. Michaela, I'm going to jump across to you now. So I want to sort of now move into more of the development space and actually delivering data centers. Michaela, quite a tough question, and you know where it comes from. But I just wanted to sort of get your view, and we'll talk a little bit more about the delivery risks and those aspects of it. But just in terms of, and I know you guys are involved with Day2 City, and that's probably why the question's sort of coming your way. But just in terms of the value that a data center would provide to, say, a mixed-use development. You know, how attractive is it to a mixed-use development? I know the buildings are not always super exciting, depending on where you come from, but you know, what value does it add to the other tenants within that mixed-use development, and does it add any value at all?
Cool. Is it on? Yeah. Hi, I'm Michaela from Hudari Africa. Thank you for having me on the panel. So yeah, a very difficult question, and I think the explanation of a co-location and a hyperscaler is probably a good one to lead into this. So when you look at a co-location and you have multiple tenants coming into your area, you've got multiple people servicing that, okay? So you've got employees that are coming in. Data centers themselves, the operators, they don't create jobs, point blank. Maybe in a massive data center, you've got 10 people that work there. When you have a hyperscaler, you have even less jobs, okay? Because now you have only one tenant coming in with their 10 people, and you've got the operator. When you have a colo, each of these different tenants have people that are coming in to service their data centers. This brings foot traffic as one. But I think the biggest, okay, and so my argument is that it is beneficial for a mixed-use development, maybe not like Tattoo City that has a massive industrial portion, maybe a smaller mixed-use development. It is beneficial to have a co-location data center in that space. And probably the biggest thing that we find when selecting a site for a data center is the due diligence that goes into selecting that. In terms of power, in terms of fiber connectivity, in terms of floodplain risks, natural disasters, whatever they are, I think other tenants can get a lot of security in the fact that if a data center has chosen to come into your precinct, you're pretty good. Like you've backed the right horse here, because it is, and we can all attest to having gone through these processes, it takes a long time for a data center to put their signature on the piece of paper to buy a piece of land. I think the other thing is obviously from a power and connectivity standpoint. So, I mean, obviously we're from South Africa, and we can easily go 2-4 hours with no electricity, no problem, we're all happy, it's fine. The Wi-Fi drops for 5 minutes and all hell breaks loose. Like the world is coming to an end, I can't phone someone, it's the end of the world. And so with a data center being nearby, you're obviously decreasing that risk. Again, from a co-location or even having retailers or Oracle in an office building next door, or even Amazon, if I'm Amazon, I really want Visa and MasterCard in the co-location right in my precinct. That means your transaction time is quicker, that means you have no drop, and I mean for those guys, they lose their sale because the credit card transaction has taken too long. If you're there right there in your data center, you've got that straight link. So I would say that's probably your best bet. Yes, they're not beautiful. We have seen some beautiful ones. I mean, in Madrid and London, they've made them very pretty with some things on the outside. Ultimately, the general argument is they're noisy, they suck up all the power, they don't create jobs, and they're ugly. Okay? That's standard why you wouldn't want a data center in your precinct. But I think if you look at the benefits, and I think for something like a Tattoo City where you already have all this industrial, it's not going to detract from anything, but it will bring more. And what we see all the time is you build one data center in a precinct, and I promise you, in 2 years' time, there will be 5. Because they just cluster together. And so from an investment perspective, a land developer perspective, it's really positive to put a data center in your precinct.
And Michaela, I suppose, I mean, later today we've got, I think at about 12 o'clock, we're talking a little bit about future cities and smart cities. But I suppose it's the same argument. You know, how do they support future cities and smart cities? There's big, you know, tech requirements and big data demands within those spaces. I suppose there's sort of a similar argument in terms of.
For sure. So I mean, a smart city is ultimately a connected city where you have lights that turn on and off by themselves. The bus arrives when you arrive at the bus stop. It's all connected. I mean, if you had a electrical or a connectivity fault in that system, your whole smart city falls down. Okay? So the whole purpose of a smart city is connectivity, and so by having that data center closer, you're reducing the latency, and ultimately it benefits the city. In prep for that question, which I only received this morning, I did a little bit of research, and in a smart city in Singapore, basically the catalyst for the development was they needed to have in the center, and it's a sort of hub and spoke system, in the center of the smart city, you had a co-location data center that had 5 megawatts of space. And that was how they said, well, that was how we could develop a smart city. If you didn't have that, non-starter.
It wasn't going to happen. Okay. I'm going to come back to you, Clement. Just a quick question for you, and Donald touched on it a little bit earlier, but the legislative environment within Kenya and what you had experienced, were there any sort of major pitfalls and you know, any major issues in developing your site?
So what we did look at mostly is what was the client's requirements. And we created a facility that will fit the client mostly. And of course, after that, we made sure with local consultants, architects, local designers, to make sure we fit the local regulatory rules in place. But at the end of the day, we're just a sort of a warehouse, so we're not receiving a lot of people, as Michael said. It's not like there's not a lot of foot traffic there. So the rules are not that complicated. What you need to get right is mostly the mechanical and electricals. And of course, you have still to follow the NEMA, WORMA, at least for Kenya, etc., if you have boreholes and those things, but they are not that drastic.
Okay. I'm watching the time here as well, so I want to try to get through as much and also allow a little bit of time for questions at the end. Michaela, let's talk a little bit about procurement and supply chain. There's been a lot of supply chain issues. You know, we've had the Russia issue. There's been a massive backlog, and a lot of people talked about that backlog as well. And then just you and I had spoken a lot about just how are they procured, and Heath touched on the fact that, you know, such a big component is either modularized or it's the big mechanical electrical equipment. What sort of procurement strategies are you seeing to deliver these the data centers? Is another point maybe to touch on is design and build. Is Kenya ready for design and build, or are we just going traditional? And how are you guys sort of splitting that up?
Cool. So I think so. The contrast obviously depends on how the data center is structured. Whether it's sort of a propco, opco structure, the developer's doing the shell and core, that 20% we spoke about. The operator is bringing in or I like to call it the guts of the data center. You can call it hot, cold, warm shell, whatever it is. They've all got a funny term for how we're going to pull it off. But ultimately, from a procurement strategy, the only way you pull off, in my opinion, the only way you pull off a data center in time is if long before you're putting a spade in the ground, you've already ordered your data center insights. The guts of the data center is procured. Now, if you're not going a propco, opco structure, and we have many funders here, the only time your debt or equity is going to flow is when you put your spade in the ground. Okay? That's too late for a data center. By the time we're building the structure, you have to have already ordered all your chillers, all your HVAC equipment, all your generators, your racks. They need to be on a ship already coming to Africa. Where we've done it the other way and burnt our fingers on many a data centers is we're done. We're happy, the thing's waterproofed, we've got a beautiful, ugly warehouse standing there with nothing inside. We're ready for a data center, but we have no mechanical, electrical equipment because we ordered it too late. So the strategy needs to be, and we're working on a development now in North Africa, we haven't even concluded the land deal, and the operator has already ordered everything that's going inside the data center. And their argument is, whether or not we use it on this data center, our rollout plan is that we're going to build another one. So we don't use it in North Africa, we'll use it in Dakar. Like, it doesn't matter, we're going to use it anyway. And so it's that upfront procurement. It's what hotel operators have been doing forever. They order all their FF&E long before, mass procurement. And so we're seeing that a lot. That works. That helps us to deliver data centers on time, to meet the timelines that they're asking for. Ooh, the design and build question is an interesting one, and it comes up a lot. And I was actually going to bat this one to Heath and see what he thought. But I think in reality, as Clement was saying, the contractors in Kenya are good, and Kenyan people are lovely. Our problem is the quality that we're receiving. Okay, so if you've got a hyperscaler like a Microsoft coming in, they already come with their full list of specifications, what they're expecting from health and safety, what they're expecting from waterproofing, what the data center is going to look like. And they visit site and they see really average concrete quality, and they will lose it. It's just not okay. So what we are often doing in African countries now is from a shell and core, that 20%, that is traditional. Okay, you use the local contractors, you help them extensively to get the quality right, you spend a lot of time getting us to a good shell and core, you involve locals. When it comes to the inside of a data center, what is generally happening is you'll bring in a European mechanical electrical contractor on a design and build stage. So we would, at sort of stage 3, you would have finished with a mechanical engineering firm, and you'll hand that across to a design and build contractor. They'll come in, they'll bring and procure, provide the labor with backup of local labor, and install the inside of the data center. And that's how you sort of do a hybrid of the installation.
Thanks, Michaela. That's really good insight. I want to just touch on, before we go to sort of closing remarks and a few questions, I just wanted to touch on ESG. So it's obviously becoming, certainly for JLL and the global clients that we're seeing. So maybe Ravi and Donald, just how important is ESG to you as investors and funding these projects? And I'll come back to Heath just to talk a little bit more about the S in ESG, just around sustainability. But how key is it to you? And for a data center development, I suspect it's quite a big factor.
Yeah, I think the short answer, and I'm cognizant of time, the short answer is yes. It's extremely important, especially for Actis as sort of a sustainable hard assets investor. It's one of the key criteria we look at. So it's not, what ESG can we implement once we've invested, but it's how we can change that dynamic around sustainability and ESG before we invest as well. And I'm proud to say that RAG Center was actually the first facility in Africa. I think outside of South Africa, there was offered IFC Edge certification, which happened last year.
Donald, same for you guys, I presume, eh?
Yeah, exactly the same. And I think it's just one element. I mean, everyone talks about it a lot. A lot of the electricity produced in Kenya is renewable. And so that's one of the things that's making it a very attractive place for us. Because, ultimately these things, use a huge amount of energy. But it's front and center. And I think also just extremely high standards for among other things, safety. And that's something that, we've struggled to get elevated to the extent. There's no compromise made from the principals sitting and wherever they are for any kind of local conditions. It's got to be absolutely world class.
Thank you. Heath, it leads into sort of the last question, I suppose, before we go into closing remarks. But obviously, data centers are big carbon emitters. With Kenya or Nairobi being 85 to 90% sort of renewable energy, geothermal, hydro, etc. Sustainability obviously quite key, and are the big global operators, is that like a big factor for them? And does it position, I suppose, I'm sorry, a couple of questions in there, but does it position Kenya quite well just in terms of renewable energy? And, that's quite a big selling factor, I would have thought. Huh?
Yeah, totally it is. And a lot of it's driven by end customers. So if you've got international end customers, they have ESG requirements, so you as a data center operator then need to try and meet those. And Kenya definitely, with Nairobi being, what is it, I think it's 98 or 95% renewables. That's a great selling for Nairobi. Other parts of Africa, data centers are driven by demand, internet demand, right? So you do end up in places, say like South Africa, where our general power is quite dirty. However, you do have opportunities through IPPs, through RE IPPs to engage. So Morocco is the same, Senegal is the same. So the operators, particularly the big ones, will want to know there's a plan. They might know that you can't do it today, but they want to see that you have a plan, you can do something, you're engaging, and you've got plans to get there in the future.
Okay. Thank you, Heath. So, guys, I'm going to move to closing remarks. We have got a little bit of time, so don't be panicked by the clock there. Murray did say we can go a little bit over. So, just based on what we've discussed, the nature of what asset class it is, the fact that there is this massive growth and investment into data centers. Michaela, I'm going to start with you and then just run down the edge. So just what are your closing remarks? Maybe just a minute of what your general thoughts are and what you think of the space.
So I would say that the investment that we're going to see into East Africa in the future in data centers is definitely following the hyperscale tenant. Okay, I think that my 5 cents is that we have an oversupply already in Kenya of co-location data centers. We have racks that are sitting empty. I think that the demand is going to come from a hyperscaler, and if I was either a land developer or a developer, I would be backing a hyperscaler to be coming into Nairobi, and that's building anything from a 15 to a 30 megawatt data center purpose-built in a phased approach, at least coming in with 5 megawatts secured with a hyperscale tenant. One more thing. I think the procurement question that you asked earlier, it sort of places the SEZ zones, and we've got FEZ zones in Nigeria, etc., in a well-placed area from a procurement standpoint. I think a lot of what we do developing data centers is the procurement and getting things cross-border. Okay, that comes at a high cost. It also often comes at a high bribe rate, trying to get something into a country where they don't actually want it to come in. And I think that the facilitation that you get from an SEZ zone and that assistance is definitely worth it, and that's why we see a lot of the data centers going into those regions, as well as the opportunity to not pay import duties or VAT on the equipment coming in. That's staying in a specific SEZ zone.
Heath?
Yeah, so look, I think the hype's real as well. I think it's, like I said at the start, just a matter of time. Talking sort of, let's say, directly to this audience and being aware that there's property developers and the like in here, I think you need to look at how you can prepare for an inbound or a Clement for your particular site, right? And as Michaela said, you need to look at flood zones, you need to look at power, you need to look at fibre. There is let's say, a pretty standard list of key things they need to hit. If you've got developments where you can help facilitate power and planning, you will be a long way ahead, because we spend months, sometimes years, getting power to these sites. If you can come to a data center guy and say, look, I can get your day one, as they call it, because they do a phased approach. If I can give you your day one straight away, that's like at least 6, 9, maybe 12 months ahead of the program already. So that gives you a real advantage. So it's an opportunity. It's slightly different, but I definitely think there's one for the developers out there.
Yeah, on my side, so I'm very bullish about Kenya, as you can imagine, especially around the cloud hyperscales. Even though when I see what I'm building and what I'm going to build and what is already in the pipe from my competitors, it's already quite a bit that is coming. So I'll be really not necessarily careful, but I'll tend to maybe partner or have some very strong clients behind me to start a new data center in this part of the world. Something which is amazing about Kenya is also the fact that electricity is so very reliable, as much as we sometimes complain when there is no power in the house for a few hours when it rains. When you look at other countries in South Africa or etc., I think Kenya Power, they did a pretty good job in terms of quality and also in terms of pricing. The kilowatt hour in Europe, in Germany, is like 50 cents of a dollar or 60, or in UK, same thing. While in Kenya, as much as we increased big time, we are at 25 cents of a dollar per kilowatt hour, which makes it very attractive on an international scale. So I kind of dream a little bit that some data center in Europe will outsource a little bit to Africa. Because on the top of that, we are also very skilled people. They speak English much better than I do. So now I think it's a very good place to be for hyperscale and for data center in general. But the market gets a bit saturated. I think Ravi was saying about Nigeria, it's less competition and maybe a much bigger market as well.
Clement, you couldn't resist mentioning South Africa's power issues, huh?
I heard only.
Ravi.
So I'm going to try and answer this question from a little bit less detail from the operators and just more from an investment standpoint. So I guess if you look at where the opportunity is in data centers, right? Data centers are characterized by two things. One is a high degree of operating leverage and a high sort of capex intensivity. And so to earn big returns, you sort of need scale, and you need to be in a market that warrants scale and warrants big investments. So that raises a question, tier 2 markets, right? Will they have the right workload, the right enterprise demand to warrant scale? Will we see Microsoft going to Burundi with a 20 megawatt deployment, for example, right? And so I think the opportunity is a function of really of three things. One, how much will investors be willing to pay, or how much have they paid? Number two, what markets will they enter? And number three, what cost efficiencies can they operate with? Now, cost efficiencies are related to scale. And we've seen a lot of players worldwide make a significant amount of money in data centers by exploiting operational leverage, through scale and sort of bypassing the high fixed costs that are involved in the data center industry. And what you do is with every dollar that you earn, more and more goes down towards your EBITDA, the bigger that you are. Second part is sort of maybe focusing on the opportunity for East Africa. And my view is that I think East Africa is very unique compared to the other sort of blocks in Africa, South Africa excluded, because the ease of doing business, the flow of goods, the flow of capital, the language barriers, the cultural barriers, right? As Clement mentioned, English is very widely spoken here. Donald and Heath mentioned data sovereignty. I think the East African bloc is so much more integrated than other parts of Africa, like West Africa. You won't see regulators stepping in and sort of implementing data sovereignty, right? Whereas you probably would in West Africa. And what that introduces for Kenya is it means Kenya could be a data and connectivity hub for the region in ways that Nigeria probably can't.
Thanks, Ravi.
Thanks very much. I think what is very encouraging is the trend is completely in your favor. As Internet of Things starts rolling out, I mean, you're kind of seeing ChatGPT and all of these, innovations coming at us, so that, I don't know, the technical term would be that sort of data intensity or whatever is just going to keep increasing. So I think that you're saying that, it's just going to be an ever-growing market, and I think that's very encouraging. I think the other thing is that's great for any of the countries where they're being built. It brings in a lot of technical skills. So, whilst it's tough getting them executed, everybody who works on one of these data centers learns a lot, from the simplest guy working on the building site right through. So I think that's great. I think it leaves you with a lot more skilled, let's say, construction and MEP industry when the data centers are being processed. That's it. Thanks.
Thank you, Donald. That's really useful. I've been given the blessing. We've got a time for a few questions, eh? 2 questions. Great. So, guys, we're going to open to the floor and just, I think we're going to take 2 questions, and I can see 2 hands, or I can see 3.
Thank you. My name is Fahim Bekele. I'm from DLR Group Architects. So my question was on power. So I know Kenya's power prices are good now, but they've been going up, and the tax situation has been dynamic. So I was curious to know how that's affecting the thinking. And then I haven't heard too much about water, because I've heard data centers do use millions of liters of water. So 5-10 years down the line, how's that affecting the planning?
Should I pick this? Yeah.
Yeah, go for it.
I mean, as I said, it still is expensive, but compared to other African countries, it's very okay. And as I say, pretty reliable in terms of power, especially if you are in those industrial areas or industrial parks. You can now have 2 lines of power from Kenya Power, which was not the case a few years ago. So even Kenya Power is getting much and more into data center mindset. So, I mean, it's far from perfect from the northern countries in Europe, etc. But I still think Kenya, at least, and I don't know really much of the other countries in the region, but Kenya is doing pretty okay. And then in terms of water, you have more and more systems that are efficient in terms of water usage. Nairobi, we have also some region in Nairobi around Limuru or some industrial parks where we could use free cooling at night. As soon as the temperature drops below 16, 17 degrees, the chiller stops and they just use the cool air from outside to cool the chillers, so without using power for the condensers. So, I mean, there are ways around that, but they are still consuming a lot of water. And the good thing of Nairobi compared to Kenya in general, we've been hit by a big drought. But Nairobi, we can drill boreholes, and there's still a good amount of water, at least for now.
And can I just add to that? There's 2 quick things. One, the power costs in a data center, the way the leasing model works is you pay for the space, but power is actually passed through. Like, depending on how much power you use, the end customer actually uses it. So yes, power prices go up, but it goes through the customer. The second thing on the water, that's a legacy thing from the big hyperscale data centers when they used to do a lot of water-cooled chilling. So that is a more efficient way to do it, but it uses huge amounts of water. Now we've more air-cooled chillers, raised temperatures, so there's not as much water use in data centers anymore.
Thank you. My name is Katono from CBRE. Thank you all for it's really insightful, your discussion. So I've got a couple of comment questions. You mentioned about the enterprise data centers, which are most likely moving into colos or hyperscaler. So what happens to the legacy data centers that they have? What does that mean for e-waste for the future? And and what structure can be done to make use of those space? I mean, do you decommission and sell it off in parts, or do you what sort of users will you attract back into those empty and huge enterprise data centers that are now moving into colo sites?
Heath, I don't know.
Okay, well, so look, we're seeing it still in, say, South Africa. Like the big banks, for instance, they had like 2, 6, 8, 12, 18 megawatt data centers. And for instance, Standard Bank, their big flagship data center is 80 megawatts. They sold it to ADC, is a co-location provider. So they sold it on to a co-location who then operates it for them. We see others in the market where they're just purely decommissioning them. They can't get rid of them. And you will have a time, we're seeing it in South Africa now, where there's a bit of a glut of these data centers, so you've just got to purely decommission them. But in a segmented market, they do offer a good price point in sort of the lower end of the data center spacing if you have a segmented market, which we'll see in Europe and the States.
Thank you, Heath. Guys, I think that's all we've got time for. I'm sure you can grab, I'm sure you can grab either one of the panelists, at a tea break just to ask any questions. All that's left for me is just to thank the panel. You made my job really easy, and I think there was some great insights, so thanks very much for that.
Thank you.